Hello, welcome to our session today on how to speed up your first property purchase. Okay, all right, a quick declaration. This recording is for general purposes only. Before making any decisions, you do need to contact an experienced tax agent for some professional advice. Okay, let's have a look. Okay, from my experience, I noticed that there was probably one of the biggest missed tax saving opportunity that's actually on the first home super saver scheme. What it is, I actually have ATO link open. Okay, so the name is called First Home Super Saver Scheme. Um, you can actually do a Google search to find it, okay, and then have a read of the tax office requirements. Basically, what it is, when you can actually make a concessional super contribution and then only pay 15%, okay, to your super fund, and then later on you can withdraw the money saved there to pay for your for down payment of your first property. All right. So basically, um, every year, you can potentially put in 15K, okay, and then up to total of 50K across multiple years, okay. So that means if you plan to purchase in a couple of years' time, you should actually plan earlier and to maximize your super contribution for this scheme, okay. So make sure you search on this one and utilize all related tax benefits. Sometimes when a client know about this strategy, it's already too late. So make sure you plan early. Yeah, if a few years down the track you're planning to do it, start planning now. All right. And then other possible strategies, you can potentially rent out the property after living there for 6 months. Okay, the reason being 6 months is generally the requirement for the period of time you do need to treat the property as your main residence to be able to have access of state level or federal level related first homeowner benefits. Okay, so that's the general requirement. So after the 6 months, after you have received all the government benefits, you can potentially move back with your parents, okay, or you can actually rent somewhere yourself, or you can actually change around as well. Say, for example, you might be renting a property earlier before your purchase. You can actually move in to this new property for 6 months, more than 6 months, and then you move out to a property you want to live in. Okay, we start renting yourself. Okay, so of course, if you do move back with your family member, with your parents, it's going to be rent free. Okay, then you can just utilize, basically get in property market already and utilize this new property as an investment property from that point on, and then also potentially receive all the tax benefit, including negative gearing, or utilize the tax loss to offset your other income. All right. But if you were to rent somewhere yourself, okay, the rental income from this property will be able to offset or reduce the rental income you're paying to for your own rental property. Okay, or for somewhere for yourself to live in. And then, of course, if in case the rental income and your own rental expense is the same, what are the benefits? Of course, it's going to be the tax saving related to this investment property you're renting out. Okay, so potentially you can utilize negative gearing strategies, or you utilize the tax loss to offset your other income as well. And that's actually add-on benefit on top of offsetting your rental expense from this rental income. from the other property. All right. And then, of course, there is a 6-year rule to reduce your future capital gains tax. Okay, once you live in this property or treat it as your main residence at the very beginning, provided if you the rent out period is actually below 6 years, you can elect this property or treat this property as your main residence and still receive a capital gains tax exemption in the future. So the related 6-year rule requirement, you can potentially do a Google search, ATO 6-year rule. Okay, and then yeah, just have a look at treating former home as main residence and then the related requirement. In our YouTube session, if you go to our YouTube channel, we do have one property related. Yeah, also if you need to buy a property before purchase, you got to watch this one. 10 things to do. Okay. Oh, not this one. My apologies. 10 things you should consider before buying a property. Okay, make sure you watch this one. In this recording, we also mentioned quite a few other strategies here before purchasing. But one thing we mentioned is actually on this 6-year rule. We can make sure you understand the rules and you don't make any mistakes in the future. But of course, all the strategies we've mentioned here, they are just top level. There are so many other factors and strategies you got to consider before you purchase your first property. If necessary, or it's actually strongly recommended that you find a good tax agent to maybe have a proper consultation so that you understand all the factors you do need to consider. All right, so then that's everything I want to mention in today's session. Thank you. Also here is my contact details and also my qualifications. And if you have any questions, please feel free to give us a call or drop us a quick email. Thank you.